Janet Yellen headed to Capitol Hill today. The markets will be watching as Federal Reserve Chairwoman Yellen delivers her semi-annual testimony to Congress today and tomorrow. Lawmakers are likely to grill the Fed chair on interest rates as well as the Federal Reserve's $4.5 trillion balance sheet. J.P. Morgan CEO Jamie Dimon yesterday weighed in on this, warning that the Federal Reserve's plan to unwind its bond buying programs could be, quote, more disruptive than people think to the markets. Joining us right now to weigh in, House Financial Services Committee member, Congressman David Kustoff of Tennessee. And Congressman, it's good to see you. Thanks so much for joining us today.
Good morning, Maria. Thank you very much.
What are you looking for mostly to solicit from Janet Yellen today?
Well, a number of things. One is I do want to hear her position on housing reform, want to hear the position on where she thinks the Fed is going to go in terms of interest rate hikes, and also in terms of lending money, community banks being able to lend money more freely, banks being able to lend money more freely, where the economy is going. Now, I have been able to hear her in one prior session earlier this year. I heard the chair say that we were at full employment or near full employment. I expect her to probably say that again today. I would take issue with that because I see in my district, a lot of part of my district had been stagnant or close to stagnant since the 07, 08, 09 recession. We're not at full employment or near full employment where I come from.
Yeah, it's a really good point because we look at the numbers every day as well, and when you look at tax receipts, they're pretty weak, weaker than people expected. So maybe the numbers are showing real euphoria in this economy, but it's really not so when you go to districts like yours. Look, she's going to be speaking to your committee today, so we want to get a sense of what you're most focused on, and the economic story is certainly important. Do you think that she should change her expectations of raising interest rates? I mean, if she continues to raise interest rates, is that going to dampen the economic traction that we've seen, even if it's just a bit?
It could, and I do want to hear her testimony. It's interesting that you put it in perspective like that, because the last 5, 6, 7 years, the Obama presidency, we saw virtually no economic growth or very slow economic growth. We all know that. With Donald Trump's election, the expectations completely changed, and we have seen a stronger economy. So I think a lot of economists believe that we will see an interest rate hike probably late this year, around December. I do want to hear her thoughts on that. As you know, and you've seen enough and covered enough of these hearings, it's pretty well scripted. Her answers are drafted to the questions that she suspects that we're going to ask. But let's see if we can nudge her a little bit to see if, in fact, that is what the Fed is thinking, and that is the best course of action.
Yeah, Congressman, it's Kevin Kelly. I'm glad you're talking about the interest rate hike, and we led off this segment with they have a $4.5 trillion balance sheet. When they start to unwind that, rates will go up. The problem I have with this is that you have the Fed intervening in the free markets, artificially suppressed interest rates, and now the market is addicted to those artificially low rates. And once they start to rise, it could have devastating effects on the economy because it hasn't trickled through to small businesses. How do you feel about the Fed having a balance sheet, intervening into free markets, and basically artificially suppressing rates? Are you going to push her on this, saying, hey, the Fed shouldn't be doing this? It's up to Congress to enact fiscal policies.
Well, I'm concerned. I think you hit that point exactly right. I'm concerned about the assets on the Fed's balance sheet. They do need to get those assets off their balance sheet. And then you talk about small business. And again, take my area. I'm from Tennessee. I'm from the western part of Tennessee. We have a really good, strong network of community banks. They want to be able to start lending again. They've been stagnated because of the rules of the Fed, because of the CFPB, because of Dodd-Frank. Of course, last month we rolled back a lot of Dodd-Frank in the Choice Act that we passed out of the House. That will give smaller banks, community banks, larger banks the opportunity to begin lending again to these small businesses. But the Fed has to start getting these assets off their balance sheet.
Let me just ask you, Congressman, because the central banks, all the central banks led by the Fed, are preparing to reverse this massive asset purchases that we've been seeing over the last several years. And the Fed's balance sheet is $4.5 trillion, as Kevin just pointed out. Right. I want to add on to what Kevin just said, because yesterday, here's what Jamie Dimon, the chairman and CEO of J.P. Morgan, said. When that happens of size or substance, it could be a little more disruptive than people think, Jamie Dimon said. We act like we know exactly what's going to happen, and we don't. It could be disruptive to markets as they unwind the $4.5 trillion. Do you expect a market disruption?
No, and I think that from what the Fed has indicated, number one, they will start getting these assets off their balance sheet, but they're going to do it, right or wrong, they're going to do it in a slower fashion. And I don't think, if they do it in that manner, that we'll see the disruption that some economists might think will happen once the Fed does release those assets.
Here's Mike Murphy.
Congressman Mike Murphy here. My concern with unwinding this balance sheet is that it's being overseen by people who just don't have markets experience, by the Fed, by Janet Yellen. I was wondering if you're going to press on the fact that they need someone like a Jamie Dimon, someone with markets experience to help them in this. We've never been in this position before, yet, of course, we need to unwind the balance sheet. But we need to have someone overseeing this, I think, that actually understands the mechanisms from a boots-on-the-ground perspective of how to do it. Will you press her on that or recommend that?
Yeah, we'll have a limited amount of time for questions this morning. That's one area that we're concerned about because, as you pointed out, the bureaucrats at the Fed are strictly that. They are bureaucrats. A lot of them do not have that professional, real-world experience. Of course, you see a lot of that in Washington, in various positions and in various jobs. So it is important to have people with real-world experience helping to oversee that process.
Yes, speaking